Okay, hi there, it's Jeff here with a video looking at the increase in employers' national insurance, which some people are calling a jobs tax. Now, national insurance is a big contributor to the government in terms of the total amount of tax revenue that comes into the Treasury each year. The forecast for this year is that national insurance as a whole will bring in just shy of £200 billion, so it's third in the league table behind VAT and income tax. And just over 60% of national insurance contributions comes from businesses, employers. Now, the tax rise announced by Rachel Reeves in the October 2024 budget is the biggest single tax increase of the new government, expected to raise well over £25 billion over the next few years. But of course, that depends on the likely economic impact of such a tax. So the rate paid by employees has fallen. It's now 8%, but follow the black line there. That shows the percentage rate paid by employers. It's going to go up from 13.75% to 15% on April the 6th, 2025. And crucially, the threshold, if you like, the moment when an employer starts to pay national insurance is coming down from around £9,000 salary per year to £5,000. So this is quite a significant tax increase, and it's a tax on employers. BBC headline here: Lush and Quick Fit warn tax rise will push up prices. And here's a report from the research from the Federation of Independent Retailers, saying over half of indie retailers are set to cut jobs as costs go up. So will the rise in employers' national insurance cost jobs? Well, the answer is yes, it will. The employment cost will go up. So that rise from 13.8 to 15% will increase the total cost of employing staff, as well as, and this is really, I think, quite important from an economics point of view, the marginal cost of adding extra staff. So there are potential for job losses, a contraction in labour demand. Thousands of businesses, large and small, will face pressure to cut their costs, which could lead to job losses. It could lead to store closures. It could lead to restaurants only opening 3 days or 4 days a week. And crucially, it could lead to a fall in new hiring and the number of apprenticeships that firms feel willing and able to offer in their local community. Some industries, some sectors, some occupations will be hardest hit, particularly those that are labour intensive, with a high ratio of labour to total costs. You think of retail, think of tourism and hospitality, think of nurseries, think of health and social care. They may well be particularly affected. This increase in employers' national insurance arrives April 2025 at a time when other costs continue to rise. In the hospitality sector, for example, a fall in business rates relief, along with an increase in the minimum wage, which has risen to £12.21 per hour for adult workers. The Office of Budgetary Responsibility estimates that overall these changes to employers' national insurance will add around 2% to employers' payroll cost. That's the cost of payroll, is the cost of employing people. And they reckon that firms will pass on over half of this to workers and consumers via lower real wages. Some firms will cut wages, higher prices. Many firms will raise their prices, but they will also have to absorb 40% in lower profits. This is going to have an effect. The OBR think that this tax rise will possibly cost 50,000 jobs. My instinct is, given the other uncertainties to do with Trump's tariff increases, the slashing of economic growth forecasts for the UK, this could well add a lot more job losses. Now, here's the unemployment rate for the UK over the last 25 years. We're currently at 4.5%. Where is it going to head? It's obviously been tracking upwards in the last year or two. Could it head towards 5% by the end of the year? This is one of the key charts we look at. It shows the number of redundancies, well, the estimated volume of redundancies in the UK on a month-by-month basis. You can see the spikes at the global financial crisis, the immediate spike at the start of the pandemic in the spring of 2020. Of course, that was offset by the furlough scheme. And as you look on the right-hand side there, we are starting to see signs of an increase in the number of redundancies that have been announced. Firms What are redundancies are when firms cut back on employment and they make some roles, some workers, some people within their businesses and organisations redundant. So this is one of the charts we're going to be looking at as businesses try to adjust to a world where employers' national insurance has gone up. I make no bones about it. I don't think this is the right tax to increase at the present time. I would have preferred, if the government's looking to raise extra revenue, that there's increased income tax, standard rate of income tax by 1 or 2%, for example. National insurance paid by employers is a tax on jobs. It's paid by businesses that are under great pressure at the moment. And from a labour market point of view, there will be negative consequences. So this is one to follow in the weeks and months to come. Thanks for joining in. Stay safe, stay happy, stay curious, and see you sometime soon.